Afternoon, learners. This is Mrs. Lebona from Free State Education Department. I'm the subject advisor in Thabo Mofutsanyana district. I'm the one who's going to present the balance sheet together with its notes this afternoon. So I'm happy to have you. I want you to participate, even though I won't see you, but participate when we'll have to do the calculations, especially. Make it a point that you are part of the calculations. So, to waste any time, I will start by saying, where do we get the balance sheet? We say for us to be able to prepare the balance sheet, we need an information from the pre-adjustment trial balance. From the pre-adjustment trial balance, we'll be using the extracts. If I can make an example here, you'll be given the extracts from the pre-adjustment trial balance. Actually, from the pre-adjustment trial balance, we are just using the bottom part of it, being the balance sheet section. In the balance sheet section, I will start by saying we are having the notes. We say having the notes before one can be able to prepare the balance sheet, and for it to balance, we need to take notes into consideration. Now let me just show you the format, because that's the most important thing in accounting. When you do the balance sheet, you need to know or master your format. The format is in this fashion, whereby we say assets equals to owner's equity plus liability. Because we say asset equals to owner's equity plus liability, this section of our balance sheet will be focusing on A, which is asset. Now for owner's equity plus liability, we now be using the bottom part of our balance sheet. Now, after seeing that we have the format of the balance sheet, it's for us to know which notes we'll have to take into consideration. When you are doing the income statement, yesterday you did the fixed asset or the tangible asset note. You also did the retained income. We also need those figures in our balance sheet, because that shows it's a continuation from the income statement to the balance sheet. Now our fixed or tangible asset, we say this is our note number 3. And now we come to our under non-current asset. The non-current asset being the long-term assets that we may have for a longer period into the business. But when it comes to the current asset, that is the short-term asset that you can have for a shorter period into our business. So the total of the two, the non-current asset and the current asset, it gives us, we must get a total of assets all in all, considering the non-current asset and the current asset. Now coming to the second section. The second section will be the equity section, whereby we say under equity and liabilities, we consider the capital and the reserves. And then we also have the non-current liabilities as well as the current liabilities. So here, as you can see, under equity there, we'll be considering the capital and the reserves, whereby we'll be considering the ordinary share capital and the retained income. But under the non-current liabilities, it's where we consider the loan or the mortgage loan. Those are the long-term liabilities. Whereas the last part of it will be the current liabilities. The current liabilities being the short-term liabilities. We'll come later to this when we do the activity based on the balance sheet. I just wanted to familiarize you with the format because it's very important for you to know. More so, according to our diagnostic report, most of our learners, some of them could not differentiate between the non-current asset and the current asset. You find them entering the current asset into the non-current asset, and also vice versa when it comes to the liabilities. They enter some of the current liabilities into the non-current liabilities. Fine. Now let's come to our notes. Like I've indicated that yesterday you did the fixed and tangible asset. Just as a reminder, even though I'm not going to use it for today because today I'll be focusing mainly on the balance sheet. Now I want to refer you back to the mind the gap, grade 12 mind the gap, where you have the format of the fixed asset note, and whereby Mem Kanazi explained it correctly yesterday, and the retained income. Now we have, after having the fixed asset note, then we have the inventory note. So where will the inventory note be entered? The inventory note, going back to our format, we say the inventory will be considered under current asset, because that's where we'll be saying current assets plus the under current asset, you say the inventory plus consumable stores on hand. After considering the inventory, now we come to trade and other receivables. Under trade and other receivables, let me refer you back again to the mind the gap, whereby under trade and other receivables, we have the net trade debtors. But before we can say we have the net trade debtors, we must have the debtors of the business. The debtors of the business should be indicated, like I've indicated, that we'll be having either an extract or either a pre-adjustment trial balance. For example, here, if you look at my extract, you find that here are the debtors of a business. So you just check under the pre-adjustment trial balance or under the extract. Then you say these are the trade debtors. In the trade debtors, you don't just write the trade debtors before taking some bad debts into consideration. Like I've shown you that you'll be having your debtors, and then from your debtors, if there is any additional bad debts according to the adjustment, then subtract that bad debts. Subtract that bad debts to get the correct debtors of the business. Because you know what is a bad debt? Is the money that we are not going to get from our debtors. After considering an adjustment on bad debts, then is there now that out of the debtors we can calculate the provision for bad debts. So if maybe they say 5% of debtors, you look at your adjustment. Some adjustment they don't require you to calculate the 5%. But if you are requested to calculate the 5%, what you are supposed to do, you take the debtors after considering the subtraction of bad debts, and then you multiply the debtors with that 5% to get the amount of provision for bad debts. But remember, provision for bad debts, we say this, we make a provision as a business to say these are the suspected bad debts in a business. So to get the actual amount that we might receive from our debtors. We also, again, now that after making the calculation of provision for bad debts, now this will be the amount that you should take into consideration. We say now trade debtors, after subtracting the bad debts, subtract. As you can see, we put it in a block showing now that we need to consider the debtors, subtract the provision for bad debts to get what is the net trade debtors into the business. Then thereafter, we consider other adjustment. Let's say SARS income tax. Here you'll find SARS income tax, the amount being the amount of income tax which is overpaid. We may, as a business, pay SARS. Remember, sometimes we make provisional tax whereby we pay SARS during the financial period. Now, at the end of the financial period, then we say this is the overpayment we have considered. If we have overpaid SARS, it's not part of the creditors, but it's part of the trade and other receivables. Then thereafter, any expenses prepaid when you calculate, when you make the calculations from the adjustment, should also be taken into consideration, because we know expenses prepaid, we as a business, we have paid more than we're supposed to pay. And then the income accrued, which is the income receivable, we still expect to receive that amount from the people who are owing us. So thereafter, for you to get the total amount of trade and other receivables, you take the net trade debtors, then you add it with SARS income tax, expenses prepaid, income accrued, then the total will be the total amount of trade and other receivables that should be indicated. This total, you take it to our balance sheet, whereby our balance sheet will say trade and other receivables. Then we show it there. Then thereafter, I'm done with the trade and other receivables. We have the other note, which is cash and cash equivalent. Under cash and cash equivalent, there are things that we need to consider. There we consider our cash in the bank. We consider the cash float, petty cash, any savings, and if maybe you have the fixed deposit which is going to mature and you'll be receiving the money within the coming 12 months, then that fixed deposit should be included. Should be included under the cash and cash equivalents. Each and every one, you have indicated the figures for it, and then yours is just to add to get the total. That total will be the total for cash and cash equivalent. Now we have the other note. Before coming to the other note, let me say these are the notes that falls under current assets. The one that I was referring to here is this one, the one of fixed deposit. I've said the fixed deposit, you'll enter the amount of the fixed deposit here and then subtract that amount which you are going to receive in a period of 12 months. Now the main thing is here that learners should be warned against, especially under the current assets. We say we want this sequence to be like this. We don't want you to start with cash, or we don't want you to start with trade and other receivables. You should start with the inventory, and then you come to the trade and other receivables, then cash and cash equivalent. Now, coming to the equity and liability side. Under the equity here, we consider the ordinary share capital and then the retained income. The ordinary share capital, remember when I started I said that the information, you take it from the pre-adjustment trial balance or additional extract. If I can show you here again, from my example of extracts, here are the ordinary share capital, and here is the retained income. You take those amounts, then they will form the phase they will be entered on the face of the balance sheet as part of capital and reserve. And then if there is any share premium before considering the retained income, you should also include the share premium. If you have a share premium, then you can immediately under ordinary share capital. Then you can enter your share premium and then the retained income. Now coming to the non-current liabilities, I've said it can be a mortgage loan or it can be a loan, because there is a difference between the mortgage loan and a loan. So you need also to enter it under the non-current liabilities. Under the current liabilities now, I'm done with the non-current liabilities. Under the current liabilities, here we are looking at trade and other payables. We look at trade and other payables. Now let's look at the trade and other payables. What is it that we'll have to take into consideration under trade and other payables? Here it is. Under trade and other payables, it's whereby we consider the trade creditors. I'm referring you back again to the mind the gap. Use that document, learners, because at least it's trying by all means to explain everything clearly. I'm referring back under trade and other payables is trade creditors, and then expenses accrued, income received, shareholders for dividends. If the dividend is declared but not yet paid, then you should enter it under trade and other payables. Then the SARS income tax. If there is still an amount that needs to be paid to SARS, then you'll have to enter it under trade and other payables. Remember, from the trade and other receivables, when it comes to SARS income tax, it's whereby we find ourselves paying or overpaying SARS. But if we still need to pay SARS, then it's included under trade and other payables. Then creditors for salaries. Here we are looking at the gross salary less the deductions. And when we subtract the deductions of the employee, remember, it might be the unemployment insurance fund, the pension fund, the medical aid fund, or the normally we show it as UIF, the unemployment insurance fund. So if maybe there are contributions that are made by the employer, when you have to calculate the creditors for salaries, you don't, from the net salary of the person, from the gross salary of a person, when you do the deductions to get the net salary, you don't subtract the employer's contributions. Now, learners, I think I've tried to explain the notes. We have other notes, so the most important notes are the ones that I refer to. And there's no way, because we have many notes, there's no way that you can be asked to prepare all the notes. But the most important ones are the fixed asset note that I've alluded that May did it yesterday, the fixed asset note, and the one that is more challenging to our learners, you go and practice it, and then the trade and other payables and the trade and other receivables. Because when really it comes to cash and the inventory, it's just simple. Like I can maybe refer you back that when it comes to inventory, you just take the inventory as it is from the extract, and then you add any consumable stores if there is any consumable stores on hand. I would like us to do an activity so that at least we put whatever I've said into a practice. Let's start with the trade and other payables. I'm having a question paper here. Is the paper that you have written in September this year. Question 5. Question 5 reads as follows. You are provided with information or extracted from the books of TNX Limited on 29 February 2012. The company has an authorized ordinary share capital of 2 million shares of 2 rand per share. NB, so it is important to bear in mind because somehow you will need that information showing us that if maybe the company is operating, and more especially when we'll have to do the dividends, you need to be able to know if we do the dividends, what is it that will be needing the shares and how much we are intending to give our shareholders. Now fine. Prepare the income statement for the year. We are not going to prepare the income statement. The following notes to the balance sheet. We are not going to prepare the fixed asset note because my main focus today is to prepare the trade, creditors, and other payables. So with the trade, creditors, and other payables, we need to know any additional information. Before we start with this, let me put an emphasis that when we do the additional information or when we do the adjustments, it's important for a learner to know the accounting period. Like as you can see here, the end of this accounting period ends on the 29th February 2012, which means if I count 12 months backwards, it started on the 1st of March 2011. So whatever occurrences happening during this accounting period, I must also take them into consideration. Now here we are having our pre-adjustment trial balance, like I've indicated, that when we use the balance sheet, for us to do the balance sheet, we'll be using the balance sheet section. So the trade and other payables note is part of the balance sheet section. The reason being, as you can see here, we have our creditors. So we'll start with creditors control. So our creditors control is 298,720. 298,720, and here is my answer sheet. According to my answer sheet, that amount was given. You don't have to write it, so no marks will be allocated. That amount was already given. Now we'll have to look at our additional notes. We find that the first note here, it says a discarded customer returned goods that he claimed were not in accordance with his order. These were sold on credit for 36,000 and had a markup of 25% on the cost price. The bookkeeper omitted to record this. This one, it's all about the returns of a business. It will affect the debtors' allowances, and we want to do the trade and other payables. Now the second one, G. Gary, who owed the company 12,500 went bankrupt. From his insolvent estate, the company received 40 cents in a rent. The balance of his account was to be written off as irrecoverable. No entries were made. This one, even though it does not affect our trade creditors and other payables, but you remember in this situation we'll have to calculate the amount to be written off of bad debts, like I've indicated that we should subtract additional bad debts from the debtors and then calculate the provision for bad debts after subtracting the amount, which will be 12,500, multiplying it by 0.40. I'm not there. My concern is under the trade and other payables. It reads that the fixed deposit, the fixed deposit was increased by 200,000 provide for outstanding interest. Here is for the fixed deposit, I just pass it. The bookkeeper inadvertently omitted to record an invoice for 10,800 for goods purchased. This one, it affects us because the minute it refers to an invoice, it means a credit purchase was made. So we need to add it to our creditors control. So we say plus 10,800. Then SARS, pay as you earn, it's given, it's 4,500. So the total for creditors control, I was just adding, sorry for the delay, was trying to add the creditors control given from the pre-adjustment trial balance plus the omission of invoice. So the total amount of our creditors control is 309,520. Pay as you earn, I've said it's already given, we don't have to consider that. Now we go back to our question. Adjustment number 6, trading stock on hand according to the physical stock account amounted to that amount. It does not affect us. Rent income was increased by 10% on 1st November. That part of income does not affect us. The insurance amount includes an annual amount of 24,000 or covering the period of 1st October. That one, we don't include it. Let's go to number 9. Number 9, we say, K. Katzman, a newly appointed warehouse clerk, was omitted from the salary journal in error. Here we have given a summary whereby they say the gross salary is 18,000, pay as you earn is 4,500. Remember, according to our workings, we have already entered the 4,500. It's given to us. Now the pension fund, it's 8% of the gross salary, the UIF 1%. Then you'll have to look for the net salary. So in this case, we say the pension fund. For us to calculate the pension fund, we say 18,000 times 8%. It gives us 1,440. But at the bottom of this information given, there is another information that we should take into consideration. It reads, the company contributes 12% to the employees' pension fund, 12% employees' pension fund, 1% to UIF. So we must also know if we will have to pay 8% of our gross salary, and our gross salary being 18,000, what will be the 12% for that? It will be 2,160. That must be contributed by the employer. So all in all, we say 1,440 plus 2,160. It gives us a total of 3,600. Now we go on. We say an additional delivery van was bought. That is part of the, immediately they talk about delivery van, that is part of the tangible assets. And then number 11, old equipment originally costing 30,000. We just keep that, it's a part of the tangible asset. Now we come to note number 12. Note number 12, it says a warehouse was bought for 500,000 from Sekunjalo Property Developers. An additional loan was secured. Before coming to this, we must complete the number 9. The pension fund, we are fine with it. We calculated the 8%, but we haven't calculated the UIF. So the UIF, it will be 18,000. The 18,000 times 8% times 18,000 times 1%. That is 180. So we as the employee, we pay 180, and then the employer will pay 1%. That will give us another 180. So the total there will be 360. So because we are not yet finished with the salaries, we will have to look for creditors for salaries amount. Remember what I've said when I was trying to explain the trade and other payables at the beginning when I was doing the format. I said in a case whereby a salary has to be paid, when we check or we calculate the creditors for salaries, we are not supposed to add the employer contributions. So here we take the 18,000, we subtract pay as you earn, the 4,500 given, we subtract the 8%. When we do calculations, you remember the 8% there, we find that it was 1,440. And now we subtract the 180, being the 1% of UIF. Then we say the creditors for salaries, the amount that must be paid to our creditor, being the person employed, will be 11,880. Now we can proceed to the next, number 12. We can proceed to the next additional information. According to number 12 here, it reads, a warehouse was bought for 500,000 from Sekunjalo Property Developers. An additional loan was secured for this purpose from PKN Bank for the full amount at an interest rate of 12% per annum on 1st September 2011. This transaction was properly recorded, provide for outstanding interest on the loan. So which means we'll have to pay an interest on loan, and if we still owe an interest on loan, that will be an accrued expense. So we have our accrued expense here that we need to calculate. So from our accrued expense, what we do is our starting point will be the extract. We look at the amount of loan, mortgage loan. There it is, the mortgage loan. It says it's 700,000 at a rate of 12% per annum. So we say 700 because the 500 is already included in the 700. When we'll have to calculate the interest on loan, we need to know first that from 700 we subtract the 500,000. So which means the 500,000 is the one that has been bought, which has been taken on the 1st of September. So firstly, what is the interest on loan for the difference? So 700 subtract 500, let's see, 700 minus 500. We are left with 200,000. Let me do the vacancy on my spare paper. I'll say 700 minus equals to 200. Now this is the old one, the old amount, this is the new amount. So I'll have to find the interest for both. We can start with the 200,000. We multiply it by 12%, which will be 12%. We know that it's 12 over 100 times 12%. Then it gives me, I'm sure you're calculating with me, 24,000. Now the new one, before calculating it, we should consider when was it brought into the business. It is 1st September. Now it takes us back to the financial period to say, okay, fine, if it has been brought in on the 1st of September 2011, how many months it has stayed in the how many months it has stayed in the business before the end of the financial period. So we start calculating from September the 1st. And you need to be very careful. If it was September the 30th, we are not going to include September. But if it's September the 1st, then when we count months it has stayed, then we need to include September. That will be September, October, November, December, January, and February, which means it stays for 6 months into the business. So now we can be able, now that we know that it stayed for 6 months, now we can say 500 times 12%. So for the 6 months it stayed in the period, it will be a 30,000. So which means all in all, our accrued expense on interest will be 24,000 plus 30, which will give us a total of 54,000. Now at least we know now that our accrued expenses is 54,000 rand. Now coming to SARS income tax, when we'll have to do SARS, because if I go with my question, the number 13, the amount of income tax was calculated at 195,690 at the end of financial period, which means we'll have to pay SARS that amount. So we'll say SARS income tax is 195,690. Now we go to the extract, we look at the amount of SARS, which was 180. So, which means we need to subtract that amount from the extract, this one. Let me show you. This amount of SARS of 180, then we subtract it so that we get the exact amount that we'll have to pay SARS. So it will be 195,690 minus that 180,000 rand. So thereafter, our answer will be 15,690. That should be that we need to pay SARS. Now at the end we must consider also the shareholders for dividends, because according to number 14 it says the directors recommended a final dividend of 5 cents per share. A dividend of 5 cents per share. What must we do? For us to know the amount for shareholders for dividend, we need to calculate that. Remember, it was said it's 5 cents of the shares. Where do we get that? We go back to the extract. We go back to the extract, then we say, we consider our ordinary share capital so that we can be able to know how many shares were issued, and we'll be only able to know how many shares were issued if we take into consideration the very first portion of the information. You remember when I started with the activities, I said it is very important for you to know how many shares and the par value for the shares. So it was 2 million shares at 2 rand per share. Okay, fine, we know that it's at 2 rand per share. But when we go to the extract says our ordinary share capital, being the actual amount that we receive from the selling of shares, is 2,800,000 rand. So remember, the shares the par value is 2 rand. What we'll have to do is we take the 2,800,000, we divide it by 2 rand for us to determine how many shares were issued. We take this figure of ordinary share capital being 2,800,000, we divide it by 2 rand, being the par value. Then we said the shares issued out of the 2 million shares is 1,400,000 rand. So now that we know that the issued shares were these shares at this amount, hence we say the amount received is 2,800,000. But when we divide the actual amount with 2 rand, we find that the shares issued were 1,400,000. So we take that 1,400,000 being the issued shares, because you know for each share one must have a slice of bread. So we say divide it, no, not divide, but 1,400,000 multiply by 0.05. Remember, it's 5 cents. Multiply by 0.05, being a 5 cent. So here I get, when doing, if my calculations are correct, then you'll correct me. Then I find out that the amount for shareholders for dividends is 70,000 rand. I hope you get the calculation correct. So going back to my solution, where we are trying to answer, and now for shareholders for dividends, we now know that it's 70,000 rand. So when we add all together, and then we find now that the total amount we get here is 469,550. That is the total amount for our trade creditors and other payables. So if we are doing the balance sheet. If we are doing the balance sheet, we don't have to do anything. When we are in the balance sheet here under trade and other payables, we just enter this amount of 469,550. Alternatively, we may not ask you to prepare the trade creditors and other payables. But in a similar situation like this, you'll have to do your calculations like we did. What you'll have to do here, you need to show us the debtors is 298,720. Let me just, I don't want to rewrite it. Let me just show you as it is. You just say 298,720 plus 10,800, because this is the total for it, plus 1,440. Here we are trying now to collect marks for the part marks. So you may say 1,000. It's important to show the workings, because you cannot just say under the trade and other payables in your balance sheet, you cannot just say 3,600, because you are risking if you indicate the 3,600. What you'll have to do, you need to show, even if, because we have worked it out, you need to say plus 1,440 plus 2,160. Okay, with accrued, you just say, you remember it was accrued, it was 24,000 plus 30,000. The part marks are important because they will at least advantage us. If maybe we didn't get this right, at least we know that by indicating the amount, somewhere, somehow, a mark will be allocated. So that's how we expect you to do the trade creditors and other payables. So learners, we are done with the trade creditors and other payables. Now I want us to do the balance sheet. This was just an example of one of the notes we have for the balance sheet. The same with others, the trade and trade debtors and other receivables. I've shown you how you should go about with, and with it is very important to remember, bear in mind every time that you must subtract any additional bad debts from the debtors before calculating provision for bad debts. Now I think we can proceed. Now we proceed to the balance sheet. By proceeding to the balance sheet, I'm using November 2011 paper. That is last year's final paper. So with the last year's final paper, I have an information. I'll quickly read it. I'm sorry, I'm not going to do all the questions from that paper because my focus point today is the balance sheet. Like I've indicated that I'm not going to do the fixed asset, even the retained income. What I'll do, I want us to see how are we preparing the balance sheet. So 4.1, I'm not going to do it. You'll do it with your educators, please, with due respect. But 4.2, we should do it because when you read 4.2, it reads, you are provided with information relating to Master Limited for the financial year ended 30 June 2012. Remember, I've said knowing the beginning of financial period is very important, because when you'll have to add information or when you'll have to adjust, then you must definitely make use of the financial period. So if it ends on 30 June 2012, so it means it started 1st July, when we count backwards, 1st July 2011. Required, use information to complete the note for the fixed or tangible assets by filling in the missing figures indicated by an asterisk sign. We are not going to do that. It has been dealt with yesterday. Then 4.2.2, calculate the retained income on 30 June 2012. You may prepare an appropriation account if you wish. And even here, I'm not going to do the retained income. Even according to the diagnostic report, our learners performed well when preparing the appropriation account. Now the business of today, prepare the balance sheet of Master Limited as on 30 June 2012. Show your workings in brackets as notes are not required. I've started with the notes. Now here they are telling us that notes are not required, which means we'll be using the plus sign or the minus sign to indicate, and then we'll also indicate our workings. So note number 1 is the one of the fixed asset, indicating how we should fill it in. And then details of fixed assets, number 2, we don't need it. And then number 3, we say the following figures were extracted. The following figures were extracted from the accounting records at the end of the financial year, which is 30 June 2012, which means it started 1st July 2011. Now, according to the information given, I just requested, because I'm not going to do the fixed asset note, I'll just take the amount for fixed asset as it is and put it here. It was 2,132,310. And because I'm also not going to do the retained income, I will just say, because this retained income at the beginning, remember we use it when we prepare the appropriation account or when we prepare the retained income note. So this is not the actual amount that we must use, because remember we must take this retained income at the beginning, add it with the net profit, then we subtract the income tax, we subtract the dividends for us to get the retained income at the end. So according to this exercise, their retained income at the end was retained income at the end was 86,000 rand. So I'm trying us to save time for the balance sheet so that we can be able to focus on the balance sheet, because really we'll need these figures when we prepare our balance sheet. Any questions from the previous activity, maybe from the learners, before proceeding to the activity of the day, so that at least we are on board with the activity of the day? In the absence of any questions, I can just say thank you very much, learners. Mine is to enter the figures that I've already indicated to you, that these ones are given. In my balance sheet, I'm just going to enter the tangible asset amount and also the retained income amount. Then thereafter, we'll be doing the workings in the face of our balance sheet. This is our answer sheet. Is the answer sheet for the balance sheet. And remember, according to the instruction of it, it says no notes were required. So we'll be doing the plus minus here. So as you can see, the tangible assets there, like I've indicated, that the retained income and the fixed asset, we regard that as given. So let me put it, because it's given. The fixed asset, we say, is 2,132,310. And then the retained income the retained income here. I said the retained income under equity and liabilities. The retained income is 86,000 rand. So this is given because actually they're supposed to originate from the notes of a fixed asset or tangible asset and the notes of retained income. Now we proceed. Let me do just an activity before we break a bit. Let me just do an activity. Like I've indicated that our learners, okay, we'll do this activity when we come back. Just have a break for a while. Then when we come back, remember, we'll be doing the balance sheet. Thank you very much for listening.